Welcome to the Pirls Stock Market Commentary video, your 7-minute snapshot of technical market conditions for the week, featuring the proprietary bull bear point and figure market breadth summary chart for February 19th, 2017. Market breadth. With this past week's market advance, our bull bear point and figure ratio at 1.78 rose slightly from 1.72 last week, continuing within bullish territory. The total count of securities in bullish or bearish patterns increased 3% to 3,208. The count of bearish stocks increased 1%, while the count of stocks in bullish patterns increased 5%. The Pirls PNF Market Breadth Summary Chart shows us a market now 14 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 137 points for the 8th advance in 14 weeks. At a positive 324.87 points, it has risen back above the November 2014 top and the March 2015 top, but continues below the December 2016, April 2016, May 2016, and August 2016 tops above plus 100, as well as continuing above all 5 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and no distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum, now at a positive 149.62, up from a positive 145.52 last week. We wait for the CCI 20 daily to return to the plus or minus 50 zone for a new trade. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 42 weeks ago, while the daily CCI 20 began a Woody's uptrend 13 weeks ago. The CCI 20 weekly has risen to a positive 172.97 from a positive 156.90 last week. We await the return of the CCI 20 weekly to the plus or minus 50 range for another trade. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech, retail, and banking on top. Gold and silver and oil on the bottom. Bullish, KBW Bank and S&P Retail have entered the top 5. Gold and silver has entered the bottom 5. Computer hardware continues in the top 5. Oil continues in the bottom 5. Semis has left the bottom 5. Oil services has re-entered the bottom 5. Bearish, brokers and networkers have left the top 5. Focus this week from www.zerohedge.com. What's Wrong with This Picture by Tyler Durden. The following are some key points and charts. Turn on any mainstream business channel or President Trump's tweet stream, and you will be told how awesome everything is going to be. Look at stocks, look at sentiment surveys, look at consumer confidence, look at small business optimism. There are two small problems with all of this. Philly Fed beating by 10 standard deviations, NFIB small business optimism at record highs, but industrial production is dropping. The hard data is not confirming the soft data at all. Philly Fed beating by 10 standard deviations, NFIB small business optimism at record highs, but industrial production is dropping, real wages are shrinking, and the housing market is imploding. As FactSet notes, the S&P 500 forward PE is at its highest since 2004. Back on December 31st, the forward 12-month PE ratio was 16.9. Since this date, the price of the S&P 500 has increased by 4.8% to 2,349.45 from 2,238.83, while the forward 12-month EPS estimate has increased by only 0.5% to $133.49 from $132.84. Thus, the increase in the P has been the main driver of the increase in the PE ratio to 17.6 today, from 16.9 at the start of the first quarter. Thank you for watching this President's Day version of the Pirls Stock Market Commentary video featuring the proprietary bull-bear point and figure market breadth summary chart compiled by Donald Pirls, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant President's Day weekend, that you are looking forward to a prosperous and productive week coming up. Wishing you happy President's Day and true success.